Hey everybody, we're taking a look at the excuse me, S&P 500 as we get ready to trade February week 3. We're already at monthly OPEX. Market is closed on Monday for the President's Day holiday. Tuesday it reopens. Wednesday we get the Fed minutes. Thursday we get weekly jobless claims. Friday we get some PMI data, and then obviously, since it's monthly OPEX, we will have the expiration on the open for the S&P 500 options settled by ticker SET, and we will take it from there and see what the market has in store for the rest of the day. Often we see a certain type of day leading up to Monday morning expiration, and then a different move in the afternoon. Sometimes it's a big sell-off, sometimes it's a big parabolic move higher. We'll see, but there is lots of stuff that we could be shooting at this week in terms of data and timing. Okay, here is our intraday chart from Friday. Here was our initial balance period. Here was a big short squeeze breakout that happened just after the end of the initial balance period, and the rest of the day we couldn't really break down back in it. It was very interesting that our initial balance high was a look just above the previous day's close and then pull back. So this kind of left not only the initial balance high, but our all-time closing high that we had just set on Thursday as a key line in the sand for the day. And you can see we couldn't really close and get locked in back below it and back in the initial balance range. And so from there we took off, and at the end of the day we had that breathtaking move higher. We started off with about 300 million to the buy side on the early market on close, and that got revised all the way up to over 3 billion. It was like something like 3.4 billion to the buy side. And that's how we got this almost parabolic feeling move on Friday at the end of the day. And you can see our RSI ended up way overbought. Now, futures are going to trade tonight from 6 p.m. Eastern Time till 1 o'clock Eastern Time on Monday, 1 o'clock p.m. So let's see if futures continue higher and give us another new all-time high to resolve when we come in on Tuesday, or if they sit sideways, or if they try and pull back. We did resolve our outstanding all-time high at the end of the day on Friday with ES, made a new all-time closing high, but of course once the bell rang, ES went and printed a little bit higher. So even if we just have that to resolve, we do have a little bit higher move in order to sew up all these outstanding moves with ES and S&P together in the light of day. Here is our weekly chart. Here was the previous week's close. It was our weekly all-time closing high. Our new close for the weekly all-time closing high is Friday's close at 39.34. So Friday's close is both an all-time closing high and a weekly all-time closing high. And you can see that our low for the week tried to dip back into the previous week's range. Previous week was very bullish, very, very, very bullish, and we only dipped back into it for a little bit of a look, and there were buyers there to support it. And this is really marking a really good line in the sand for us. It isn't until we break down below this 38.86 level that we're really going to see any meaningful move to the downside. And as long as any dips come back and hold this, that's a great dip to buy with a very little risk on stop if you keep it tight, and we can go. If you wait to short here at 38.86, I think there's going to be a lot of good reward for it to the downside too. Of course, you can try shorting from up here, but just keep in mind that this 38.86 level is really key and a good level of support for us on the S&P. All right, here is our daily chart with the measured move on it and the fork that we have been watching since all the way back here after the sell-off in September, and then we had another sell-off even lower in October. We have created this fork out of that move, and it has really extended out and been great for us. The whole objective with a fork is to watch the median line, and as you can see, all of our highs have sort of looked above this and fizzled, looked above and fizzled. It wasn't until back here around from Thanksgiving through Christmas that we started making this move above the median line and actually like using it for, for closes and lows and everything. You could really watch it sort of be a structural support for many, many sessions in a row here back from late November into early December. And back here at the start of the fork, you can see this parabolic move above the median line and then this crashing blow that came back down. And this dip here into the November election, just to the head of the November election, is where the final point on the fork is plotted. So what's what we're looking for here now? We're looking to move above this median line, and this median line keeps rising. We did not quite make it to the median line on Friday, but our high earlier in the week on Wednesday did, touched it and pulled back to this 38.86 level on the weekly chart, which rhymes with where our measured move target was in the first place coming into this year at 38.87. You can sort of see the daily chart walking along this level. So we're looking for that move to the median line on Tuesday, which it rises to. I got to change this note here. Yeah, 38.80. Oh no, I did. Okay, I saw Friday here in this note. It's actually, I already wrote this out for next Friday. Next week, this median line runs the high 39.48 all the way to 39.66 to 67 by Friday. So we're going to start getting into 80 handle rule levels if we could just get to this median line and over it. Here is the roadmap chart with more upside showing. Our median line level starting on Tuesday would get us for a look below 39.50, and if we could push through 39.50, we get into the 80 handle rule levels, and at 6% plus on the year for 2021, 6% move up from the December 31st close would get us to 39.82 for a perfect 80 handle rule move. If we fizzle here and pull back, or if we continue higher towards 7%, at 7% we would get to 4,019. So that's how we're going to get to 4,000, is by using that fork, moving above that median line of the fork, and then getting into those 80 handle rule levels towards 4,000. I don't know that that can happen this week. As I said at the beginning of the video, we got those Fed minutes on Wednesday. Last week we traded an all-time high on Wednesday and then sold all the way back off to that 38.86 level. So Wednesday could be a very volatile day for us with the Fed minutes, because then we're looking into the weekly jobless claims on Friday, and then we've got PMI data. I'm sorry, weekly jobless claims on Thursday and PMI data on Friday. So plus monthly OPEX all wound up into there. Okay, here is our roadmap the way I normally show it, with lots of downside stuff, because this is where you really need to have your navigation straight. If we were to get into an inside day on Tuesday, instead of assuming that we're going to just open up and continue higher, our range that we are going to be looking to stay within would be this 39.34 to 39.11, which is right about where we opened, and it also happens to be the halfway back of last week's range. Isn't that convenient? So in order to determine what our high of the day was going to be on Friday, they took the low from Wednesday to the Friday open, and we doubled that up. And as evidenced by the fact that you can add together Friday's high and the low for the week that happened on Wednesday, divide that by 2, and that gets you back to 39.1108. Our 10-day simple moving average is rising up. It's going to rise over 3,900, and pretty soon, might say by Wednesday, it's going to be right in here in line with this 39.11 halfway back level. So, and you can sort of kind of see a line in the sand developing there as well at that 39.11. Here's where we opened on Friday. We closed around here on Thursday. We closed around here on Wednesday. We closed around here on Tuesday. So there's obviously quite a lot of action going on around this 39.11 level. So if we were to fade back, we need to hold 39.16 through 39.11, and if that breaks, we got our 10-day simple moving average wherever that has risen to at that point in time. And then if that breaks, we've got that big level at 38.86, as explained at the beginning of the video. When that breaks, we're going to have a lot further to the downside. I would say whatever our all-time high is at that point to this 38.86 at minimum, we would double that move down. So let's cross that bridge when we get there. Okay, I hope this video helped you out and gives you a good start to next week. Enjoy the rest of your long weekend. Unless you're trading futures tonight, then good luck with that. And we will see you Tuesday morning. Good luck and good trading.